Shawn, I've got one question for you on JD, because obviously you're suggesting, and a lot of people are suggesting, that we are going to see, and even they're suggesting that you're going to see retail growth coming through in the second half. But is that realistic? Because I can understand the case that you're making on JD, in terms of them trying to drive GMV, in terms of them trying to drive merchant count. But if the customers just aren't there, no matter how many subsidies you can provide, you can't provide subsidies into, really trying to, at detriment of your margins, can you?
Yeah, I think that you make very good points. All these companies are very smart. They have all these A/B tests. For example, I first pull out some subsidy and see the results, calculate ROI. If it could not satisfy with my targets, why should I continue to pull out money? On the other hand, I think JD's, second quarter, there's some one-off phenomenon. For example, the weather is very hot, so their air conditioning sells very well. And also that the cell phone, I think a little bit better than people expected in the second quarter. But in coming to the second half, I think this kind of drivers probably will disappear. It's more about market sentiment. And another very major category for JD is FMCG, so all these supermarket-like products. So I think that for this part, probably it's a little bit more stable. But for electronic devices like cell phone and PC, their traditional category has advantage. I think it's still going to under more pressure.
Shawn, really quickly, just in terms of Tencent, because there are a lot of different ways that people can look into the numbers. Some people are suggesting gaming revenues down. Net bookings, though, they actually beat, and now relatively decent. But the thing that stuck out to me, and perhaps you can explain why this was, is that free cash flow absolutely, versus what the expectations were, whether it be on an operating or just a general basis, was absolutely derisory versus what the street was looking for. Is this something that you expect to continue? Because, the big case for investing in China right now is you're getting a cheap valuation on the expectation of these are basically money printing machines, and then you can expect to see upside eventually. So what's going on with the FCF over at Tencent?
I think for Tencent is that they have, as you said, that they have low, their gaming didn't perform very well in second quarter. And I think that situation will continue. But the advertising is better, much better than people expected. I would expect that situation will continue, that they have weak gaming and better advertising. But in terms of, I think, the cash, because Tencent, the problem for Tencent is that it has some parts correlated to the macro environment. For example, advertising and fintech, but a lot of its net income and probably cash flow actually coming from game, which is a sector that is not so deeply connected with the macro environment. It's more about that whether you can promote, whether you can develop and promote new games, high quality games. So if you look at that competitive landscape, Tencent's key competitor like NetEase and miHoYo, they all promote some very good games right now. So I think Tencent is losing a bit of market share in terms of gaming. So I think that is the problem, that if you really look for some companies that is highly correlated with China's macroeconomy, you should look at some e-commerce or advertising companies. For Tencent, I think if you half of this revenue or profit something still come from gaming, then you need have some special capability to track this company.